Meantime, higher rates, higher construction costs, and slowing sales have officially led us into a housing recession, according to the National Association of Home Builders. Builder sentiment saying for an eighth straight month in August, the longest stretch since the '07 collapse. Housing starts fell 10% in July, nearly to their lowest level since 2021. Where do we go from here? Let's ask Danielle Hale. She's chief economist at Realtor.com. Danielle, it's great to see you again. And this is the part of the economy you kind of definitively say, recession, end of cycle, something like that.
Yeah, housing starts are absolutely pulling back, especially when you look at the single family side of things. Now, what's interesting is that we have a combination thing going on here. So overall, total starts were down quite a bit. But if you look at the broad moderation that we're seeing in single family, it's being somewhat offset by increases in multifamily construction. So builders are pivoting to look for areas of opportunity, which they're finding in the multifamily sector. And at the same time, they're trying to manage pipelines. We've got a record number of homes under construction. So even as permits and starts are kind of moderating, we're going to still see a fair amount of activity as builders work to wrap up projects that are already underway.
All right. So that, we've talked a lot with our Diana Olick about this, but this idea that the one big difference this time versus '07 might be that prices don't collapse. And I wonder if we can get any kind of more insight on that, because it's probably the biggest factor for current homeowners, for people who are trying to figure out whether to wait to buy. Is there going to be the shoe to drop or not?
Yeah, I think that is a really challenging question to answer in today's market. There are a lot of reasons to expect that prices will maintain at the end of this cycle, unlike they did at the end of the previous cycle. We don't have the same amount of leverage. In fact, homeowners are sitting on a record level of equity today. So that's very different. We don't have a lot of underwriting problems that we had in the last housing cycle. And also we have record low vacancy rates. If you look at the number of homes that are vacant and available, it's at a record low for homeowners. It's also very close to a long-term low in the rental side of the market. So housing supply is tight, really, no matter how you look at it.
It's going to be a drag, housing activity for a while, broadly speaking. What do you think the builders should be doing in this environment?
So builders are looking forward ahead and finding that there's less buyer demand as costs go up, as mortgage rates are higher than they have been. And buyers are kind of grappling with that and maybe a little bit less eager to get into the housing market as they have been over the last couple of years. So builders are taking that into account and slowing the rate of permits that they're filing for, slowing the rate of housing starts that they're beginning, trying to wrap up projects that are underway and trying to be mindful on pricing. So making sure that they're in market segments and in areas where they can still find some profitability despite the slowing market. And what's interesting is that we're seeing a geographical shift in where buyers are really active. We just released our hottest zip codes report today, and it's showing that instead of the Sun Belt, the most competitive real estate markets now are concentrated in the Northeast and in particular in New England, as buyers are looking for affordability and finding it outside of those markets that have been hot over the last couple of years.
Yeah, and how are we on that trend? Because I see sort of two different stories kind of anecdotally forming, and the one is that there's still this strong secular shift from people who have housing equity can move to lower cost parts of the country, but the other is some of those lower cost areas that were doing very well are the first where we're kind of seeing trends normalize and drop substantially. Which would you say is the right narrative?
I think it really depends. So in some of those smaller markets in the West that benefited from a lot of outmigration from California, those are markets where we're seeing a little bit more of an adjustment. On the East Coast, we're still seeing a significant outward interest from metros like the Boston Metro, New York City, Washington, D.C. And so that's why those Northeastern markets are generally doing quite well. So it really just depends on where you are in the country, which of those trends you're going to be following.
All right. It's regional, they used to say. Danielle, thanks for joining us today.